Digital freight. Particularly innovative truck matching platforms presents an emerging opportunity in Nigeria's road freight industry. This digital solution is transforming the landscape, unlocking the immense potential of a sector that serves as the lifeline of the economy by powering trade and fueling supply chains. But what exactly is a truck matching platform? It is a digital system that connects shippers who need to move goods with carriers who have available trucks. By leveraging real-time data, it matches cargo with the closest and most suitable trucks, optimizing routes, reducing empty truck miles, and ultimately lowering logistics costs. These solutions have the potential to transform road freight, streamline operations, and accelerate economic growth. To understand the potential of Nigeria's digital freight sector, we will analyze it in terms of the total addressable market, the serviceable available market, and the serviceable obtainable market. The road freight industry dominates Nigeria's logistics sector, representing a total addressable market of up to $50 billion annually. As the demand for logistics efficiency grows, digital freight could capture a considerable share of this market. The serviceable available market, that is the market that digital freight companies can realistically serve, is about $20 to $30 billion. This includes sectors struggling with logistics inefficiencies that would benefit most from digital transformation, such as manufacturing, agriculture, and e-commerce. For a well-positioned digital freight platform, the serviceable obtainable market, which represents the portion of the market a single player could realistically capture, could range from $500 million and $1 billion. This substantial share represents potential revenue from key sectors that rely heavily on efficient freight systems. Digital freight platforms do more than connect carriers to shippers. They streamline payments and invoicing by advancing funds to carriers to cover fuel and road expenses once a truck is loaded. Upon delivery, the platform invoices shippers for the full transport costs. This requires significant capital, making institutional investors, especially banks, essential for sustaining operations and managing cash flow effectively. Truck matching platforms present a compelling financial case for banks. By reducing empty miles and maximizing load capacity, these platforms increase profits for truck operators, creating lucrative investment opportunities. Consider this: with a $500 million serviceable obtainable market, capturing even 20% of the market could yield $100 million in potential revenue. Given that digital freight platforms can generate annual returns of 15 to 20% through efficiency gains, the investment appeal is clear. Despite the promising solution, market size, and investment appeal, Nigerian banks remain hesitant to provide the working capital these platforms need to thrive. This reluctance is due to several entrenched barriers. For one, Nigerian banks traditionally favor sectors with tangible assets like real estate, manufacturing, oil and gas. Logistics tech companies, by contrast, are viewed as high risk, requiring substantial capital with uncertain returns on investment. Additionally, many banks are not familiar with the digital freight business model. Without a clear understanding of its structural revenue potential, digital freight platforms are often seen as speculative or unreliable. Another obstacle is the lack of collateral. Unlike traditional logistics companies, digital freight companies often lack physical assets that banks typically require. They may have an app or software, but without a fleet of trucks or physical infrastructure, making them intangible investments in the eyes of the banks. This lack of hard assets complicates access to financing. But are these concerns justified? Studies show that digitized logistics can boost efficiency by up to 30%, resulting in significant savings for businesses and higher profits for digital freight platforms. In fact, digital freight solutions can deliver returns of 20 to 25% over time by increasing truck utilization, optimizing routes, and reducing idle times. For Nigerian banks, investing in digital freight is more than just another venture. It is a chance to support a vital part of the economy. Efficient logistics benefit manufacturers, reduce delivery times for e-commerce, and ensure fresher produce reaches markets, strengthening the entire economy. By funding these platforms, banks can secure a stake in a multi-billion-dollar sector, making them essential players in Africa's rapidly growing trade network. Digital freight platforms are the future of logistics in Nigeria. They increase transparency, enable real-time tracking, and cut costs. Banks investing in these startups can diversify their portfolios, reduce risk, and capture returns from a high-demand, high-impact industry. As Nigeria advances, logistics will continue to play a central role. Digital freight platforms offer not only a solution to current inefficiencies, but a vision for the future. Nigerian banks have a unique opportunity to drive this digital transformation, shaping the growth of an entire continent's trade and commerce. The untapped wealth in digital freight lies in its efficiency, connectivity, and scalability. Truck matching platforms are more than just a solution to Nigeria's logistics challenges. They are a catalyst for the future. For Nigerian banks, this is not just another investment opportunity. It is a chance to fuel an industry with vast potential for economic and societal impact. The time to fund the future of Nigerian logistics is now. Truck matching platforms can transform inefficiencies into profits and logistics into limitless opportunities. The future of freight is digital. This is not just about technology. It is about paving the way for a brighter, more connected future for Nigeria and the entire African continent.